A small nation, barely on most investors' radar, quietly did something no major economy has dared to do. Nearly 9/10 of their national wealth converted into gold, not stocks, not bonds, not dollars, gold. While central banks around the world debated inflation and interest rates, this country was already moving. So what do they know that the rest of the world doesn't? And what happens when everyone else finds out? Welcome back to Crest Finance. It's good to have you here today. Whether you're watching from a quiet morning at home, on a lunch break, or settling in for the evening, thank you for making time for this story. If you find value in what we cover here, consider subscribing to Crest Finance. It helps this channel keep bringing you clear, honest reporting on the stories shaping the global economy. And we'd love to know, where are you watching from today? Let us know in the comments below. This is the story of a nation that made a bold and unusual choice. While most countries keep their savings spread across dollars, bonds, and other paper assets, one nation decided to do something different. They chose gold, and not just a small amount. Reports show that close to 88% of their national wealth is now held in gold. That is an extraordinary number. Most central banks around the world hold only a small slice of their reserves in gold. This nation went far beyond that. The country at the center of this story is Uzbekistan. It sits in Central Asia, a region not often in global financial headlines. Yet, in recent years, Uzbekistan has quietly become one of the world's largest gold producers. That detail matters a great deal. Unlike many nations that must buy gold on the open market, Uzbekistan can pull gold directly from its own ground. Its natural resources give it a rare kind of financial independence. Instead of depending on foreign currencies like the US dollar or the euro, Uzbekistan can turn its own gold production into real, tangible reserves. So why did this happen? To understand that, viewers need to look at the bigger picture. For decades, many countries kept their reserves mostly in US Treasury bonds and dollar-based assets. That was seen as the safe, standard approach. But the last few years have changed how many nations think. Interest rates have risen. Inflation has stayed persistent in many parts of the world. And geopolitical tension has grown, especially since 2022. Sanctions became a powerful tool used by major economies, and that made other nations uneasy. If a country's reserves can be frozen or restricted by another government, is it truly safe wealth? That question has pushed many central banks to rethink their strategy. Gold offers something different. It carries no counterparty risk. No government stands behind it, and no government can freeze it the way a foreign bank account can be frozen. It does not pay interest or dividends, but that has never been its purpose. For thousands of years, gold has served one simple job: to hold value when trust in other systems weakens. That long history is part of why Uzbekistan's move has caught global attention. The early impact of this decision is already visible. By building such a large gold reserve, Uzbekistan has strengthened confidence in its own financial system. It has also reduced how much it needs to rely on foreign debt. In simple terms, the country has created a kind of financial cushion. If global markets become unstable, or if access to foreign currency becomes difficult, Uzbekistan has something solid to lean on. This is not happening in isolation either. Other nations, including China, India, and Turkey, have also been increasing their gold reserves in recent years, though at a smaller scale. Uzbekistan simply stands out because of how aggressive and consistent its approach has been. When one nation makes this kind of move, it can be viewed as unusual, but when several nations begin doing the same thing around the same time, it becomes a signal worth watching closely. For everyday viewers, this story may feel distant at first. After all, most people do not manage national reserves. But the underlying idea is one that touches personal finance too. Wealth that depends entirely on one currency or one financial system carries risk. Gold, in this story, represents a search for stability in an uncertain world. To understand why gold is being treated so differently today, it helps to look at how the rules around it have quietly changed. In April 2019, the Bank for International Settlements made a decision that did not grab many headlines at the time, but it carried enormous weight. The BIS reclassified gold as a Tier 1 asset. In simple terms, that means gold was placed in the same category as cash itself. It was no longer viewed as a risky commodity sitting on the side. It became something banks could count as top quality, fully valued reserve without any discount applied to it. That single rule change gave banks around the world a strong incentive to hold more gold, because it now carries the same weight as holding cash in the safest column of their books. This detail matters more than it may first appear. Before this reclassification, gold was often treated with more caution on paper, even though investors have trusted it for centuries. Once the BIS gave gold this new status, central banks had a clear official signal. Gold was not just a tradition. It was now formally recognized as one of the safest assets a nation could hold. Uzbekistan is not acting alone in this environment. Central banks across the globe have been adding gold to their reserves at a pace not seen in decades. According to the World Gold Council, Official gold purchases by central banks have remained historically high in recent years, with many nations steadily building their reserves rather than making single large purchases. Poland has stood out as one of the most active buyers this year. China continues to add gold as well, while also producing a large share of its own supply domestically. These are not isolated actions. They form a pattern that stretches across different regions and different political systems. It is also worth understanding what makes gold behave differently from other reserve assets. Foreign currency reserves, such as US dollars or euros, exist inside a system controlled by another government. That means access to those funds can be limited through sanctions or political decisions outside a nation's control. Gold does not carry that same vulnerability. Once it is physically held within a country's own reserves, it cannot be frozen or blocked by an outside power in the same way. That single difference has become extremely important since 2022, when sanctions were used more aggressively as a financial tool between nations. Prices have reflected this shift in thinking. Gold has climbed to record highs in recent years, even reaching levels around $500-600 an ounce during periods of high demand. During market downturns, gold has often held its value better than other precious metals, reinforcing its reputation as a stable store of wealth. This is not simply about speculation or short-term trading. It reflects a longer-term shift in how governments view safety and trust within the global financial system. Uzbekistan's approach fits neatly into this larger trend, but with one added advantage. Because the country produces a significant share of its own gold, it does not need to compete on the open market the way other buyers do. It can convert its natural resources directly into reserves, giving it a level of flexibility that few nations enjoy. This has allowed Uzbekistan to build one of the most gold-heavy reserve positions in the world, entirely through practical, resource-based strategy rather than aggressive market buying alone. Officials in the region have pointed to financial stability and reduced dependence on external debt as key goals behind this strategy. By strengthening its own reserves, Uzbekistan aims to protect itself against economic shocks and reduce its exposure to outside financial pressure. When a nation shifts this much of its wealth into gold, the effects reach far beyond its own borders. Economists and analysts have been watching closely, because a move of this scale can influence global markets, other governments, and even ordinary savers who have never heard of Uzbekistan. On the economic side, one of the clearest effects is a shift in demand. When multiple central banks buy large amounts of gold at the same time, that steady demand puts upward pressure on prices. This has already played a role in gold reaching record highs in recent years. For everyday investors, that means the price of gold has become more sensitive to decisions made by governments, not just by private buyers or jewelry demand. A single announcement from a central bank can move the market in ways that used to take years to unfold. There's also a political dimension to this story. Nations that reduce their reliance on foreign currencies, especially the US dollar, are making a quiet statement about trust. For decades, the dollar has been the backbone of global trade and reserves. But sanctions, especially since 2022, have shown that access to foreign currency can be restricted for political reasons. When a country holds a large share of its wealth in gold, instead, it reduces the power that outside nations have over its economy. This shift does not need loud declarations. It shows up simply through numbers and reserve reports, yet it carries real diplomatic weight. For communities within Uzbekistan itself, the consequences are more direct. A stronger reserve position can support the local currency and reduce the risk of sudden economic shocks. This can mean more stability in prices, more confidence from foreign investors, and fewer sharp swings during global uncertainty. In simple terms, when a government has a strong financial cushion, it becomes better equipped to protect its citizens during difficult periods, whether that difficulty comes from trade disruptions, currency pressure, or global market stress. However, not every analyst views this strategy as risk-free. Some experts point out that holding such a large share of wealth in one asset, even one as historically stable as gold, still carries its own risks. Gold does not generate income the way bonds or productive investments can. If a country needs quick access to cash for emergencies, converting gold into usable currency can take more time and coordination than simply drawing from a liquid currency reserve. Critics argue that balance matters, and that no single asset, including gold, should make up the entire foundation of a nation's financial strategy. Other analysts take the opposing view. They argue that in a world where sanctions and financial restrictions have become more common, liquidity concerns are outweighed by the safety gold provides. From this perspective, gold's independence from any single government or banking system is precisely what makes it valuable during uncertain times. Both viewpoints are represented among economists today, and neither can be dismissed as unreasonable. Beyond Uzbekistan, this story also affects how ordinary people think about saving and protecting wealth. When governments themselves choose gold as a form of protection, it sends a signal that trust in paper currency systems is not unlimited. This does not mean paper currency is failing. It simply means that even the institutions managing entire national economies are choosing to diversify away from relying on any single system. For neighboring economies and trade partners, Uzbekistan's approach may also influence future negotiations and financial planning. Countries that trade closely with Uzbekistan may need to consider how a gold-heavy reserve strategy affects currency stability and long-term economic partnerships. As this story continues to unfold, many questions remain unanswered. Will other nations follow Uzbekistan's lead and shift a larger share of their wealth into gold? Will major economies, like the United States or countries across Europe, adjust their own reserve strategies in response to this growing trend? And perhaps most importantly, what does this mean for the average person watching their savings, their retirement accounts, and the value of their own currency over time? These are the kinds of questions economists, policymakers, and everyday families are all beginning to ask. Looking ahead, analysts expect central bank gold buying to remain strong through the coming year. The World Gold Council has noted that this trend is not a short-term reaction, but part of a longer shift in how nations think about safety and independence. If more countries continue adding to their reserves, gold prices could remain elevated, and the conversation around currency stability is likely to grow louder in financial circles. There are also upcoming moments worth watching. Central banks often release quarterly reports on reserve changes, and these reports will show whether Uzbekistan continues this aggressive pace or begins to slow down. Other nations, including Poland, China, and India, are also expected to release updated figures in the months ahead. Viewers who want to stay informed can follow reports from the World Gold Council and statements from the Bank for International Settlements, both of which regularly publish updates on global reserve trends. For viewers thinking about their own financial planning, this story offers a useful lesson, even if the scale is very different. Diversification remains one of the simplest and most trusted principles in personal finance, just as nations are choosing not to rely entirely on one currency or one system. Individuals may also benefit from thinking carefully about how their own savings are spread across different types of assets. This is not a call to take dramatic action, but simply a reminder that financial stability often comes from balance, not from placing everything in a single basket. It is also worth remembering that gold's role throughout history has never been about fast, dramatic growth. Its value lies in patience and trust built over centuries. Nations like Uzbekistan are not chasing quick profits. They are building long-term protection against uncertainty, a strategy that unfolds over years and decades rather than days or weeks. Golden Crest Finance will continue following this story as new reports and reserve figures are released. Viewers who want to stay ahead of these developments are encouraged to keep watching for updates, as global financial trends often shift quietly before they become major headlines. Before closing today's report, here are a few questions worth reflecting on. Do you think more countries will follow Uzbekistan's example in the coming years? Do you believe this shift toward gold signals real changes in global trust, or simply a cautious response to recent uncertainty? Share your thoughts in the comments below and let others know where you are watching from today. As this report comes to a close, one thing is clear. Uzbekistan's decision to place such a large share of its wealth into gold is more than a financial statement. It is a signal, quiet but powerful, about how nations are preparing for an uncertain future. Whether this trend spreads further or remains unique to a handful of countries, it has already changed how the world is watching the balance between currency, trust, and stability. Thank you for following this full report with Golden Crest Finance. If this story gave you a clearer picture of what is happening in the world of global finance, consider subscribing so you never miss an update. Until next time, stay informed, stay prepared, and we will see you in the next report.